The European Parliament is, I almost said, as usual, negotiating the so-called bank union. This is what they had to read just for the debate during this week, which is the first February session. Anne Jensen from the Liberal Group and from Denmark. Have you read it?
Yes, I've read it because I cover these issues, and it's true, this is just a small part of the banking union. There's lots of papers to read, but I've got people who help me read it and give me advice to understand what's in it, yes.
It is very complicated, am I right?
Yes, but bank resolutions are complicated, so if you've got to regulate that, it becomes complicated.
So what are you going to regulate by all these pieces here of paper?
Well, we've seen with the banking crisis that banks cross borders in crisis pose terrible problems for governments, and you've seen governments step in and use taxpayers' money to save the banks, save money for the depositors, and this creates a situation which is not sustainable.
But I assure you that you are going to stop that traffic by what are you going to negotiate here?
Yeah, because what is going to happen, on the one hand we have now an agreement with a report that's even bigger on how you nationally do resolution of banks. And you have to let the shareholders pay, you've got to let some of the depositors that are not covered by insurance pay, but it's not the taxpayers that are paying. That's the general principle. And then we've got now the issue of banks, big banks operating cross borders, where you've formerly seen heads of states from, for instance, Belgium and the Netherlands sit there arguing whose country was to pay on a bank operating in both countries. We are supposed to never see this again. There we'll have the same principle of taxpayers not paying, but it's to be the shareholders and the depositors. And then if a bank has to close down, we want to create a fund, like you've got it nationally, to help sustain this process of closing down the bank. So this is what this is about, the resolution fund and the mechanism for doing resolutions.
It's said to be the last of 3 steps towards the bank union. In which way?
Well, first we had the recapitalization of the banks. So it was the Capital Requirements Directive that was changed so that banks are better capitalized. Secondly, we have better supervision. So we have a common supervisory body. Both we have the EBA in London, but we also got now the single supervisory mechanism with the European Central Bank. And then the third leg is this resolution part, and we'll have a fourth leg, which will be very, very difficult between member states as well, and that's the insurance deposit schemes. So that's still missing. We don't have any suggestion or resolution on that yet, but it will be coming up. So there'll be these 4 legs.
And that will mean in concrete words what?
Well, each country has their insurance deposit scheme. The idea is that we should also have a common scheme or a mechanism for exchange between member states. If a bank goes down and you have to pay insurance on the deposits, then there should be a fund that can help pay this. So again, it's not the taxpayers, but in fact it's the banks, which means it's actually the bank customers, or you can say it's the good banks that will be paying for the bad banks, but it will be within the system.
Forgive me for not understanding. You have some so-called bail agreements. Asking to have banks insured, to have them being capitalized in a way that the customers could be safe. Isn't that enough?
We are pushing all buttons at the moment, and one might ask whether it's overdoing things. We are sort of reacting to the former crisis, and the next crisis might be totally different, or you can say we are in a different setting right now, because the problem today is not the problem that was during the crisis, that banks took too high risks. Actually, some would be claiming they take too little risk today, so it's detrimental to the economy. So that's actually our problem, how to face in. But it is a political need we see, that we do find a system that is more coherent and is more safe to prevent anything like what we've just had. And we need to have it cross-border in order to live up to the fact that banking is cross-border.
But do you really, and that would be my final question, think that all member countries will accept, governments in the member countries will accept that now is the EU coming in and supervising, monitoring the banks on national levels?
Well, they have agreed on the single supervisory mechanism, so in fact member states have accepted that. Of course, you have ins and outs. You've got like Great Britain, who's out also because they're not part of the euro. You've got Sweden, that's out. In my own country, Denmark, we are discussing whether we should be in and out. So that's part of the problem. And it's also part of the problem we are discussing very much in Parliament, saying with ins and outs what's going to happen to the internal market. Will it be competition on an equal footing? And part of the amendments in this report is actually trying to focus on this, saying that we need to make sure that this will be competition on equal footing, and the fact that some banks are covered by a common mechanism doesn't put them in a better situation than those banks that are not covered by a common mechanism. We really need to be very careful about what we do, and we need to be very careful that we don't institute some kind of moral hazard where banks in one country do things they shouldn't do because somebody else will be paying. We don't want that.